Good morning, everyone. It is Monday, November 13th, half an hour before the market starts and kicking off the week. So let's take a look, see if anything happened over the weekend, see how futures are looking. There was one news item that could be affecting the markets. And that was over here on Friday after the market closed, downgraded the United States. I guess I shouldn't say downgraded. They warned that they're changing their outlook to negative instead of stable. So what does that mean and what's the difference? It used to be that the United States was AAA. They were AAA in the major rating agencies, so S&P, Fitch, and Moody's. Back in the financial crisis of 2008, S&P downgraded the United States to AA. And this was a really big deal because the United States is considered the risk-free rate, and every single financial model in academia considers the United States rate as the risk-free rate. And if we're saying that the United States is no longer AAA, then that plays with our financial models that every single financial system is based on. Well, this past August, Fitch did the same thing. They said, well, United States, you've got too much debt. You've got this debt ceiling, political infighting over your head. And so we're going to downgrade you too. And now we're having the third rating agency threatening to downgrade to AA. So they're not actually downgrading. They're just changing the outlook to negative, which means they are considering downgrading. That will be really big news because now all three rating agencies no longer consider the United States a risk-free nation. And we have to decide as a industry how we're going to handle that. So, for example, if I go into over here into Thinkorswim and I check out their Analyze tab, they're all basing on an interest that they're assuming is risk-free. And that 5.25 is exactly what the Fed target rate is. So if we go over here to Fed target rate, what do we have? 5.25 to 5.5. So everything is kind of assuming that this 5.25% or the rate that we pull from the United States is actually risk-free. And if it's not risk-free, then what does that mean to all of our models? And so far, we've just been ignoring. It created a big deal in 2008 when S&P downgraded and everyone was scrambling and caused chaos in the markets. But then sort of the conclusion was, oh, we're just gonna keep on going. So we'll see how long this can last. If all three downgrade, then we'll probably see some turmoil again as the financial industry scrambles to figure out what to do. And I doubt this time they're going to say, well, we can just completely ignore it. Okay. So that should be negative news for the markets. That should put downward pressure on the markets. And let's see what's actually happening in the futures. So yes, we are down. And yes, this is approaching significant territory, right? So we're about 0.45% on the NASDAQ, about 0.35 on the S&P, and about 0.3 on the Dow. So this is definitely approaching significant, but what I want to see is how that has developed. So on a 1 minute chart, if I go to my my S&P futures, and we can see as we're approaching the opening, it's definitely traded down. So we started up here. This was the Friday close, and then we came so definitely significant move downwards. And then in the Asian markets, for some reason, we traded up, but now as we're approaching the open of the United States markets, we're starting to trade back down. So I would call this a downward bias in the markets right now. I just want to look real fast. Let's take a look at the NQ. I want to check, yeah, NASDAQ, same thing. Yeah, and so let's take a look at bonds. Same thing. Although in bonds, it looks like it was just a lot more negative. we did trade a little bit up, but not as much as the equities. So this is all downward pressure on the markets as we go into the open. And let's just take a look on the chart. So on the daily chart, so over the weekend and last Friday, we were talking about how we broke above that MA90. That was unexpected. And we want to see if there was going to be follow through. So about 50-50 chance of it continuing upwards or actually still pulling back, which was our original expectation. So we want to watch this market very carefully. So far at the open, it's looking like we're starting to pull back. Will it continue? We don't know. So we're going to want to see if there's going to be earnings events, economic calendar events, how the Fed might react to economic events. And then, of course, that would affect bonds, and then bonds will affect the equities. So let's take a look at that. So far about 50-50, although right now with the futures market down and looking like there's some applied downward pressure, we're going to slightly favor this downward movement, right? But we want to be prepared for both, okay? So let's take a look at our economic calendar. Just make sure that's the right week. Yes, so nothing much today. Today's quiet, so today we can expect to trade technically. But further up in the week, it looks like we do have quite a bit of stuff. So for today, with that downward pressure on the futures, it looks like a little bit slightly more likely that we are going to pull back. And then does that last into the week? Well, there's going to be other influences other than just technicals as we move through the week. So tomorrow we've got the CPI that's going to be really big. That's going to give an indicator of inflation, and then that gives an indication of what the Fed might do, and that gives an indication of what bonds might do and interest rates might do, and then a directionality to the market. So we definitely want to watch CPI on Tuesday. We've got retail sales and PPI on Wednesday. Those are going to be really big. So PPI, again, that's going to be an indicator of inflation. Retail sales is going to give an indication on economy, or at least how much consumers are willing to spend. And retail is a pretty major part of the S&P 500. So that's going to be important to watch. Then Thursday, industrial production, that's going to be supply and demand. So that's going to be GDP. And then housing starts and permits, that'll be important for the housing market. So we do have some really interesting things happening this week. Let's see on the earnings this week. United States. Okay, so Dow Jones, so not a lot of earnings happening, at least in the major indices. Right, only 14 in the S&P 500. So definitely the bulk of earnings seasons is behind us, but that doesn't mean there's not important companies reporting. So right here, just right off the bat, Dow Jones, Cisco, Home Depot, Walmart. So Cisco on the tech side, Home Depot and Walmart, major retailers. So that's really interesting because we have, so these are 14th and 16th before market. So that would be important on the 15th, which is Wednesday. So we're looking at Tuesday, Wednesday, and we've got that retail sales report also on Wednesday. So it looks like retail is going to be pretty important this week, and we're really going to want to watch that. So let's just see in the NASDAQ, we got a semiconductor, I think like B2B software, I believe, and then Cisco Systems, definitely communications and B2B software, cybersecurity, and then here we have another retailer, Ross Stores, another major retailer, and then the S&P 500, Target and TJ Maxx. So definitely retail is going to be really big this week. So we definitely want to pay very close attention to that. So if I go over to my sectors, let's just see how retail has been doing. I have a feeling that hasn't been doing well. I think from last week and the week before when we were looking, it was always near the bottoms. Okay, so on a 6 month basis, we are very close to the bottom. Only utilities and staples are below it. That's really interesting because this is all massive. We have one of the growth sectors right next to two of the most conservative sectors. So there's definitely on a 6 month basis uh, scrambling inside the sectors. So we don't have clear direction movement within the sectors. But of course, we haven't been looking long term ever since the Middle East conflict started happening. So let's look on a shorter term basis. Let's look about a month. Retail still at the bottom, along with consumer discretionary. Okay, so these two are aligned with each other. And then if I look on a 2 week basis, still towards the bottom. 1 week basis, basically at the bottom. And then I don't have anything shorter than that except for the last day. So we can see on Friday, retail was still towards the bottom. So retail definitely looking very, very weak. And technically looking very weak. So it came up, bounced off of that MA 150 and came down below all the moving averages, broke below the MA 50, the EMA 20. And even though we had this green bar on Friday, all it did was come back and touch that EMA 20. So we definitely have overhead resistance. And if the retail sales come in poorly, and if the earnings on the retail, all those major retailers come in poor, that's going to drag the retail sector down even more and put downward pressure on the S&P. So far, downward bias in the S&P 500, which supports our original feeling that we were more likely to pull back to the EMA 20 or maybe this 50% retracement line before we could resume upwards. So on a medium term, we're still expecting this to be a break of the trend because we had a lower high, lower low, lower high, lower low, now a higher high. So if we have a higher high and then we retrace down to 50% retracement, now we have a higher low, then that's an indication of a change of trend right here. So that would be our long-ish, so I guess more medium-term outlook. But for the short term, we're starting to gather once again a little bit more bias towards pulling back. That doesn't necessarily mean that'll happen today, but it could develop throughout the week as we get more and more retail news. And if that retail news is weak, that's going to put downward pressure. So it's looking like retail is going to dominate unless something weird and crazy happens with the Fed and interest rates. Like this, where was it? Over here, this CPI data and PPI data, more than likely the retail sales and the major retailers' earnings are going to drive us later on in the week. Today, just technically. And technically, if we get a pullback, then we've got a head start for the rest of the week. So let's see if there's anything else that we need to consider before we take a look or we get ready for the opening of markets. I think that's going to be, we got a pretty complete picture. If you're going to day trade today, I would stick with the S&P 500. And you see that in the pre-market, it was very steady, even moving slightly higher. And then we just collapsed and came down. As we got closer to the US Open, we just started pulling down. So there's definitely downward pressure in the market right now. And it's going to be difficult to draw any super significant lines to the downside because we're still in that downward movement. But we can grab these highs from last Friday. And these peaks right here where we reacted a few times, maybe even pull it a little lower. And then a pretty even keeled consolidation range all the way through here. Actually, let's just move this down to these lows right here. And then we have the current consolidation range, but by the time we open, this could have moved away from it, but we might as well stick a line right there. And again, we don't have much to the downside to, so if it just starts breaking down right at the open, we don't have anything to show over here. So what we want to do is we want to grab that MA50, maybe the EMA 20, and the 50 retracement line is a little too far. So let's grab those two, the EMA 20 at 429.97. EMA 20. And even that is really far away. That's really far away. I'll keep it there anyways though. We'll do MA50, which is at 432.43. Okay, that's really far away as well. So let's try to grab a few levels from the Friday session. Okay, so this consolidation area, I'm going to move this up a little bit. Okay, because we had a matching consolidation through here and right here. And so I'm going to grab this. This is actually a big region where we have a peak, a low, and a consolidation. So I'm going to just grab an average of that. Just remember that's a region, not a line. And I'll grab one more right here. Okay. So we're going to watch the S&P 500 very carefully today. I personally would not really be day trading anything else, just because of I would want to stay focused on the overall market at this particular moment in time. If you're a professional day trader, if you really like day trading and you spend the bulk of your trading time in day trading, then of course, Tesla is looking great. It's got great upward movement. It's very strong versus the overall market, because the overall market S&P 500 was trading sideways and then broke down. And you can see that during that same time period, Tesla has been nothing but up. So if you want to day trade Tesla, great. That has an upward bias against the market. So if the market starts to come down hard in the morning or anytime during the day, and Tesla remains steady, that's really strong. And at any point of time, if the market reverses, even if it's not today, if it's tomorrow or later in the week and it pops back up, Tesla being strong to the market, as long as it remains relatively strong, it's going to pop up even further. So Tesla would be on my radar screen for a move to the upside once I expect the market to start moving up again. And Tesla, at least at the moment, is very strong to the upside. So I wouldn't mind keeping my eye on that. Apple recently, Apple is definitely not looking like the market as well. So there's normally it tracks the S&P 500 very well, but you can see that it went up and it went down. Now it's flat. So it's still relatively strong to the market. It's been relatively strong to the market, at least since 340, 350 in the morning. So that could be one to look at to the upside also. And then, I don't know, let's just guess lows. Maybe retailer might be weak to the market. Lowe's, not a lot of action. Target, not a lot of action. Walmart, not a lot of action. Okay, so maybe that's it. Maybe I would just watch these three, and if the market's going to be weak, then you just play the market, and if the market is going to be strong, I would play Apple or Tesla. Right. So that'll be it. We're about 10 minutes before the open, so let's go ahead and get ourselves ready for that, and I will see you in the aftermarket.